Welcome to News Now with me, Sumit Chaturvedi. We saw a bout of recovery on the last street today. Let's begin by markets as we are telling you. D Street today ignored Donald Trump's tariff war. Nifty gained over a percent in trade to close above 22,300 levels. Benchmark managed to snap its 10th session losing streak. Broader markets also continued their gains this Wednesday. All sectors, they ended the day on a higher note led by metals and energy stocks. So biggest news today is the bouncing back of the market, Nifty gaining, Sensex gaining, and we will talk to our market expert, Sunil Subramaniam. He is joining us. Thank you for joining at this moment, Mr. Subramaniam. Let's begin by talking about this rally today we saw. We would like to ask you, can the rally sustain over the next few days?
A little bit, because I think that there's been a lot of money, domestic money sitting on the sidelines. I think they were waiting for some degree of certainty. I think while Trump has announced tariffs, reciprocal tariffs, and all of that, I think the correction in the markets has given them a kind of a bottom. So I think a little bit of buying has started from the domestic side. That's why the broader market. And I think, see, it's the question of uncertainty. You always say buy on the rumor, sell on the fact, right? So in the sense, buy on the expected. So in this case, since there was a huge hang of uncertainty around Trump, but yesterday his address to the Congress kind of laid down clearly what he was going to do. Some of them is not so good news for India from any particular sectors, but overall, I think markets like clarity. So they know that this is what Trump is planning. So to some extent, some bottom fishing has started. It might sustain for a few days, but I would expect a real recovery to really sustain in April when these reciprocal tariffs kick in, and second, the earnings season starts. So I think that will give a clarity on which stocks and sectors based on guidance for next year to buy in. But right now, like I said, since there's a lot of money, domestic flows have been strong. Domestic fund managers have a lot of money on the table. They are, I think, buying what they think has a less downside risk in the coming days.
And Mr. Subramaniam, if we talk about the Donald Trump's every day something coming out from him, do you think markets have taken them enough, or markets have taken this risk enough that this is enough now? Donald Trump will not go beyond that. They're factored in the Donald Trump factor already.
No, I can't say with 100% surety on that, because Trump can always come up with new surprises, right? So you can say that to the extent that he's kind of declared victory in terms of saying, I made these promises, I have done that. So market is probably, there's a little bit of relief that he's declaring success, which means that more surprises are going to be less, but it can't say that it's zero. And especially as far as India is concerned, we've got to see how he plays, because he has talked about India and China are those highest tariff countries and reciprocal tariffs will kick in. But at the same time, I think that the fact that India's share of exports to the US is very less compared to China, right? China is about $300 billion. We are at $40 billion. So I think that whatever it is, there might be some benefit coming into India is also a thing. So to that extent, I would say markets, probably 70-75% have taken Mr. Trump's actions into account. There could be another 20-25% depending on what new he comes up with. But I think some of the positives to come out are that Mr. Zelensky, I think, has now accepted Trump's leadership. He said he's willing to negotiate. Trump has also said that he wants a quick end to the war. Second is oil prices for India is a very key right now, with the OPEC countries kind of saying that they will now bump up supplies, and Trump going on his reviving the closed wells. Low oil is good for India. So I think these two are positives, an end to the war in sight, perhaps in some form, and this, which I think will be good from an Indian market's perspective.
And what about FII factor? Do you think FII, they have also now the bottom out of that effect, also FII pulling out, and Indian markets again showing that domestic investors are here to stay?
See, domestic fund managers have more than 2.5 lakh crores of cash on their books, especially in the mutual fund space. I'm leaving PMS, AIF, those could be adding to this pile. So this money is basically being generated out of one, fresh flows through the SIP inflows, and second is by some profit booking by the domestic fund managers in the small and mid cap segment. That's why the correction there over the last few weeks and months has been fairly severe. Now with that cash, they're ready to redeploy it because there's been a correction, and I think valuations are now easier. Small caps and mid caps are still not completely devalued yet. They're still on a premium relative to large caps, but I think large caps are in a very comfort zone because if you see the 5-year Nifty PE average, it's now come below that. So I think the downside risk is less, so domestic money is coming in. On FIIs, I'll point out a couple of things, right? So one is that with Trump's certainty, what's happening is that if you see US interest rates started easing from 4.5, they're down to 4.15 kind of levels. Second is the dollar also, I think, will not remain so strong. If you see the DAX, it's already come down to about 104 yesterday. So when you're seeing a chance of the interest rates are coming down and the dollar is weakening, and FII now making fresh investments, it's not so worried about the risk of depreciation of Indian rupee taking away his earnings. So I think to some extent, a kind of a bottom there is there. And so they are now feel emboldened to get into the emerging markets. And like I said, within the emerging markets, I think India's growth, the fact that we are among the highest projection till 2026 of 6.5%. The second is our PMIs are also among the
Get your
highest.
point.
Purchase Manager Index is a very good indicator
Yeah.
of future GDP growth. So I think India stands favorably positioned from a weakening dollar, dropping interest rate scenario.
Right.
That FIF flow, we can get a decent share of it.
Right. Right. Thank you, Mr. Subramaniam, for joining us this evening and getting us all these details. And after